Today we are going to be looking at how I traded Forex back in the day and comparing it to how I trade Forex now. I'm not saying you can't be profitable trading Forex any other way, but then this is the one that I found most profitable. So we are on GBP USD right now, my favorite pair, my trading bay. This is my trade bay right here. Comment down below what your trading bay is, don't tell my wife. But anyway, we keep it moving. I'm going to put this on first of all. This has nothing to do with what I did back then. People always ask me, what is the indicator that I use for my day separators? And guys, look, I use no indicators. There's not one on my chart, not one indicator. So what I do is I just grab this tool here, the vertical line, and I just put it to the beginning, literally when the day starts like that. And then I might want to make it fancy. You might, drop some text in it and stuff like that. So call it new day or new week, new week, and that's it. So I do that manually, and there probably are indicators out there. If there is one, then go forth and use it if you want. There's no shame in that, but this is just how I do mine. Now I've put that on the chart. I'm going to be showing you guys what I would have done back in the day as a retail concept trader, someone who traded retail concepts. And like I said, some people are profitable trading retail concepts. This is not bashing, but then this is just what I used to do back in the day, in my earlier days of trading. So when I wake up in the London session, I'm about here somewhere. It's 6 o'clock in the morning. And the very first thing I see when the market opens for the week is I'm going to draw it up for you guys and just comment down below whether you used to trade this halfway through, something like that. There we go. And boom. So basically what I've just drawn up here is a bullish flag. We see an expansion and then we see some kind of bullish flag over here. This is a continuation pattern. So basically you get the expansion and then you get a bullish flag. What I was told back in the day by the various different educators, after price expands, exhausts out, then eventually price will continue to push higher. So that was what a bullish flag was. It's a bullish sign, a bullish continuation sign after an expansion, which is this here, this expansion higher. And so automatically what I'll be looking at then is I'll be looking at some kind of break and retest, maybe a confirmation candle, and then look to take price higher. Cool. So right here, so I've paused it now. So right here, what do we get? We get some kind of break and retest. We get a break above, we get price coming back into the range, and then basically what I would have been looking at is some kind of confirmation sign to take this higher. That would have been a bullish candle, and then I would have been in this trade. I've played it forward once, and this is it, guys. We get the bullish candle. This is what I'll be doing. I'll be looking to jump in from the close of this candle with a stop loss here. So we have roughly about a 26 pip stop loss here, and they always used to say, look, put it beneath the low. So maybe this would have been a 30 pip stop loss. Then I would have been looking for a move higher to run above this high over here. Ideally, I'm looking for a 1 to 3 hour trade. Look, it says with 3.03. So this is a 1 to 3 hour trade. My stop loss is 26 pips. I'm looking to get 80 pips for a 1 to 3 hour trade. With this, I would have been Gucci. No, this is me. This is a bullish flag. I'm good to go. Let's go. So let's go ahead and press play and show you guys what happens next. There we go. We've run out the stops here. The stops get taken here. Even if I pull it to 30 pips, the low of this is 36 pips. So that means I still would have been stopped out with a 30 pip stop loss, which was like the common thing, have a 30 pip stop loss. Every single trade was a 30 pip stop loss. And if you're being cheeky, you're pushing about 20 pips. That was how I used to trade with those retail concepts. We have to understand, this is not no buying pressure and selling pressure. We know that the banks are in control of this. There's an algorithm behind this. And we know that price is drawn towards the money. Now what I'm going to do is I'm going to go ahead and show you guys how I trade. And I actually did take this trade as well. And I will play the entry for you guys as well, so you guys will know what I'm thinking about. Okay, so this is how I traded this now. The day opened up, or the week opened up, and it opened up with a massive gap. Immediately, this is where my eyes are drawn, because I know price likes to fill in gaps. It does not mean that I'm not looking to trade on no Sunday or none of that, right? That's literally blow your account day on a Sunday. So I'm not looking to trade no Sundays, and so I'm going to leave it alone. I'm going to draw up the gap for you. So the gap is from this low, this is where the market closed, and this high right here, because this is where the market opened. So I've marked up my gap now. My agenda for Monday is to fill in some of this gap. We don't need the whole gap filled, we just need some of it filled. And so what I do then is when I wake up and I'm looking for a trade, the first thing I see is a retail bullish flag. And so this is probably why it's important to actually have an understanding and, grasp just a few things regarding the retail concept. Not necessarily to trade them. And if you want to trade them and you want to try that out, that's on you. But I'm just saying it's good to actually have that knowledge too, because you're going to be able to see what the retail concept traders are thinking at the time. So obviously I see a bullish flag here. I'm not trading a bullish flag, but my eyes are drawn towards the gap. So I'm going to be looking for sells. I'm going to hit play a few times to show you guys when I actually got active with a sell. After the break and retest for the bullish flag traders, the people that trade bullish flags, what did price do? Price left an imbalance. There was an area of inefficiency here. This is all sell side. being delivered. There's no buy side being delivered here. And so this is an area of inefficiency or a fair value gap. Price would want to come up into this area, offer that buy side before dropping. There we go. So that's that. Now I have an area to enter at. I'm going to go ahead and hit play. So you can see right here, look, the moment price traded up into this area of inefficiency, this is when I entered my trade, with my target being these lows. What also helped this trade as well was that these are relative equal lows. So, you know, price is drawn towards the money. And so if the money's to the downside, relative equal lows, they would want to come down to come and take this. And so this is why this area here became my very first area to take partials of 80% when price got down here. I would take partials down here and then let my runner do the rest of the work. I just call it the runner does the leg work. The runner, which is what I call the remaining 20% of the trade, is going to have the work of trying to get down and fill that gap. That's the hard stuff. This is the easy money. Those relative equal lows are the easy money. So what I'm going to do now, just before I continue, is I'm going to go ahead and play my entry. So what you're going to actually see is you're going to see me in drawdown. Price actually goes against me. And then you're going to see how close it comes to my stop loss. You're also going to see me plot on the chart where I'm looking to target to. So now I've shown you that, guys. I'm going to go ahead and hit play to show you guys how it played out. Cool. I'm going to pause it here real quick. Price gets moving. We're Gucci. We're blessed. That's fine. That's what you want to see. It takes out this low. So I'm a lot more confident in trade. And then it does one thing. It returns back to this imbalance here. And so I've always preached this. I've preached this so many different times. Stop being so fast with your stop losses being moved to break even. Guys, they will come and stop you out. Guys, I've seen it happen so many times. Just because they cut this low, just because they traded through this low, doesn't mean you have to move your stop loss to break even. That was one thing I did back in the day. They get beneath a low, move your stop loss to break even. Or they move 10 pips in profit, get your stop loss to break even. Folks, stop that. You need to get out of that mindset. What you need to do is wait for price to get down to its target level, and then you move your stop loss. Let's hit play. After coming back to our entry here, then price gets to our area of relative equal lows, where this is where I take partial profits. I'm going to go ahead and play that part for you right now. And so, guys, this is so important as well, because I was speaking to someone the other day and they were telling me that they're winning and losing, and it's not the greatest. Part of the reason was because they are not taking partial profits. The only thing you can guarantee is partial profits. If the trade is still active and we run liquidity, guys, you have to remember, once price has run this liquidity here, you have to take partial profits. Why? Because price, after taking liquidity, has a high probability of turning around. Get into the habit of paying yourself. Get into that habit of securing the bag, of taking something off the table. That's the only way you're going to really compound your account. Let's just say I never took partial profits down here, and I'm just like, you know, I'm going to go all in and just fill in the whole gap. Family, look what happens next. I'm going to just hit play. Look what happens next. There we go. Look, check this out. Price then starts to turn around after running out liquidity. When price gets down here, I'm letting the rest of my trade, which is the runner, do the legwork. So that's 20% of the trade. And then I move my stop loss into profit, and the runner gets taken out here. Now the runner's got taken out. Look what happens next. Can you see how price comes back to my entry? And then look at that, boom. Where I was in the trade from, around here, if I didn't take partial profits and didn't move my stop loss into profit, I would have been taken out, I would have been upset, all kinds of stuff would have been going through my head. I forgot to mention one thing as well. So when I entered, right, my stop loss was just beneath 50% of this candle here, this buy candle here, just beneath 50%. And then this was where I took 80% of the trade. So it was a beautiful trade. So you can see this would have been a much better return. This could have been a 1 to 7.5 R, but obviously I took 80% off here and let the rest ride and got taken out here. Always take partial profits. It doesn't really matter. Like I said, you don't need the full gap filled as long as you run liquidity and then let the rest of your runner do the rest of the work. Put your stop loss into profit. You should be good. That's how you're going to really compound your account. Just so you guys don't think I'm just literally just talking, I'm going to go ahead and show you guys my executions for this trade. All right, guys. So here are my executions. And just so you guys don't think your boy is messing around, I'm gonna go ahead and go to put my executions off. There we go. And then we got it on again. Off, on, off, on. Anyway, so like I said, this is where I entered after price I traded into the imbalance with a stop loss above the high. Price came very close to my stop loss. I could have been taken out. I still would have jumped in again, but it's all good. I took my very first partial down here. The relative equal lows. That's 80% off the trade. You guys can do the maths. And then I move my stop loss above this high here. And then this is where I got taken out, right here.